we can be successful with. Let's go to problem, let's see which one I want to do first. 17-7A. Let's do 17-7A first. Okay. All right, guys, so remember, this is a financial statement, so it's going to start with a proper title as soon as we look at it. It's just, I hate the editor here. It says, present on the next page of the financial statements of Weller Company. Why they did not put that on the other page, I'll never know.
It's really blurry.
It's really blurry. Okay. Sounds about right for my name. Let's reboot it. That's all right. We need some time to process anyway. That's my excuse. Okay. If you look on page 778, you see what's called a comparative balance sheet. That means we're showing multiple years worth of financial information. Balance sheets for public companies, which I'll go over a little bit today, are presented for 2 years, income statements for 3 years, and cash flow information also for 3 years. What you'll see here is below that is an income statement for what we call the lead year being the current year. And then below that, they give us some additional data. And in all circumstances, we're going to be provided with additional data because the financial statements cannot speak for themselves in some areas. So we'll have to look at additional data to get us up to speed. And then here, it talks about the declaration and the payment of dividends of $25,000. What I would do, if I were you, I'd put an F next to that for financing activities, because we know we're going to have to come back to that. During the year, equipment was sold for $8,500 in cash. This equipment cost $18,000 originally and had a book value of $8,500 at the time of sale. When we look at the disposition of fixed assets, they usually will have 2 components. One component that relates to an operating activity, which is the gain or loss on the sale. The other component will be an investing activity. So if it were me, I would write an O/I next to that, because it's an operating activity and an investing activity at the same time. Depreciation expense of $14,500 is in the operating expenses, so you can write O next to that. And then all sales and purchases are on account. That's actually not relevant for us in the context of how we approach these problems. So I would probably write NR next to it for not relevant, or NA for not applicable. That doesn't matter. Okay, so we'll go ahead and start this process. When we build any financial statement, we start with the name of the company. And the name of the company can be derived from the balance sheet or the income statement. So I'll write the word Weller Company. I know you can't see it, but you will in a second. And then the title of the statement is the statement of cash flows. The period being covered is the lead year. So we'll write year ending December 31st, 2010. And hopefully this will do the trick. Yeah, that's a little bit better. Okay? So, on that note card that you're allowed, I should say note card, but the sheet of paper you're allowed for notes, I'm going to suggest you at least spend some of it documenting the form of the cash flow. Because I'm allowing you guys, I shouldn't even say it that way, but I'm going to be strict on how you guys prepare the cash flow statement. I want you to have the proper headings, the proper subheadings, the proper subtotals, the proper designations for the adjustments.